parameters with which no you need to be ready, or where the VC would come and evaluate you, an angel firm will come and evaluate you. The first one, which is obviously the most important one in that sense, is going to be whether there is a market need, and that need and the timing of that market need is what you are clicking as a startup, right? So here we are going to ask those fundamental questions, whether the product offering, the value proposition, again the problem statement as a founder which you are trying to solve for, is actually required. Are you ahead of time? Are you behind the time? Right? No, as simple as if you're starting a food delivery business in 2023, where already you have likes of Swiggy's and Zomatos of the world, you are behind the time, right? So you would not get that traction, your that interest from the VC world. As simple as that, right? The second aspect is, you should always listen to your customer, right? Customers are king. They would give you enough and more feedback with respect to the problem statement and the value proposition which you are creating. Never ignore that feedback which you are getting. Always stay connected with them. Keep on improvising when you are in incubation stage, acceleration stage, when you are doing proof of concept for the product or a service which you are developing, which will help you immensely in shaping up or sharpening the products you are offering. Uh, Third one is the product market fit itself, right? And here again, related to the concept of proof of concept, right? Whether the product which you're trying to offer to the market, right? Whether it's actually fitting uh, the market or not, or in other sense, when you are going to put this product or services, will you have enough customers attracted towards that, where you are either solving for the problem statement, or you are trying to change the behavior of the customer to adopt that product, right? That's very, very critical. With respect to the fourth component here, which is to do with the competitive landscape itself, right? You need to again go back and focus what kind of competition you are having within the domestic environment, or as well as internationally. That will help you define the boundaries, that will help you explore that what all in terms of the competitive landscape you are looking at. You are competing with the big players, you are competing in a value chain, it's in which particular area, right? Because as we all know, the entire value chain, where you have this value proposition at the disposal of the customer, you need to be very, very clear with respect to the positioning of your startup, right? And that's where this entire analysis of the competitive landscape come into picture. With respect to the business model itself, no, it's very important to again reflect upon the route, the business model which you are taking, whether your product or service is a B2B, it's a B2B, or a B2B to BC, right? What it means essentially is that what is your end customer in the value chain when you are offering an end service and product to a customer, right? What is the route or the business model you are going to have, whether you're going to have a direct link to the customer where you're going to supply that product or services directly to them, or you are going to have a value chain partner in between through which the product or services will be delivered to the end customer, right? That will eventually tell you or give you a sense of how you are building that particular business, right? In terms of the unit economics, right? This is again one of the critical aspect which gets discussed from a VC perspective, that everything said and done, when you have a customer in the market, whether the customer is willing to pay for the price what you have quoted, and basis that price what unit economics are set for you as a startup initially at your pre-seed level, and as and when you grow, how you're going to improvise that, how you're going to ensure that you're going to charge the price to the customer, which will eventually help you build a profitable business, right? Because at the end of the day, as an investor, what you want your startup to do is to turn profitable, right? And from a founder perspective also, while you are creating that value, it's important for you to show that vision when you are going ahead and showing that pitch to your investor. Uh, Reason being that initially, when the product proposition or a value proposition is being pitched to an investor, right? uh, it's quite possible, and it's given that at a pre-seed or a seed level, the startup for initial few years would be in a stage of getting stabilized, right? And it's obvious that when they are getting stabilized, when they are reaching the market, when they're capturing the market, you would not be beta positive, you'll incur the losses, and that's where you want these angel firms, VC firms to take that early bet on you and help you scale. But eventually down the line, when you are ready for a scale in the business, right, somewhere in series A or series B, the expectation will be definitely to make the business or turn the business profitable, and that's where the entire unit economics has to be very very clear with respect to know how you are charging the price to the customer, what is the cost that is getting incurred, and know what is the final number or what is the final profit which you're going to generate out of it. The last but not the least is going to be the scalability of the business itself, right? Again, here the question is going to be that no that in terms of that scalability, right? What are the barriers or what are those risks which will be associated? Will you be able to scale the business domestically, internationally? Yes or no? If yes, are there any threats attached to the scalability in terms of is the business model, or is the business itself is so easy to get replicated, tomorrow anybody can come and replicate, there is no moat available, then will this business be scalable or not, right? So again, that is one of the critical aspect when you are getting ready for your investment. You need to answer this particular aspect as a part of your business pitch to the investor. Coming to the great team, when I say great team, right, and when we see the startups initially, right, initially startups is a team of founder, co-founders, or maybe one or two employees. But here, when I'm talking about a great team also includes the mentors who have helped startup to grow their ideas, incubate it, accelerate it, and reach to a stage where no, they are now in the market ready to raise funding, right? So the great team have the vision and the mission, which is to clearly disrupt or to create that value in the market for the problem statement which they are trying to drive for it. And that's where, including the mentors, including along with the founders, it's very very critical that how you are choosing the team. Here, one more point I would want to raise is that initially we have seen a lot of startup who are bootstrapped, no, have a lot of support from their family and friends, right? And somewhere, no, Warren Buffett has also mentioned that in his initial days when he saw and went through so many businesses which failed, he kind of started relying on the people whom he trusted and admired more, right? And that's what is important as a startup when you are scaling your business and bringing it to a level where it's ready for a pre-seed or a seed level round. You have the right mix of mentors, right mix of advisors also along with you as founders to help you take it to that next level, right? Help you bring those strategies into actions, right? Because at that stage you need a lot of guidance for you to execute your ideas, and that can be mix of the experts from the respective field which in which or sector in which the startup is getting built. It can be in the field of finance, it can be from the IB sectors as well, who understand the investment industry as well, which and which can help you kind of put all the things together, who can always challenge you basically with respect to your idea. It's a dartboard for you where you can always go back and throw your or validate your actions which you are taking against your strategy, right? So that's that mix of team. When you put it together, right, it becomes a very very critical aspect when you are going for a funding, and that's what in fact all the VCs or the investing firm also looks into when they are doing their due diligence, right? So mission and a vision, Leadership is again, as I mentioned, it's very, very critical how you perceive a founder as well as the underlying team, how they are performing, how they are leading the team. In terms of technical competency, again here, there can be a situation where a startup is a single founder startup, right? And the person has a knowledge of a particular industry. Let's say, take an example that there is a startup in the health tech sector, right? Now, it has two things attached to it. One is the healthcare or health side of it, and the other is the tech side of it. Now, the founder is having a tremendously deep knowledge about a healthcare sector, all the problem statement in the healthcare sector, which is now being solved through a technology, right? Now, in this case, when the uh, founder is going and pitching it for funding, generally what we would also want to see is that who in their team will have a capability to develop that tech, right? Is it currently being done by some mentor? Is it the in-house team, or is it the consultant who is helping him to build that structure? And eventually down the line, if let's say pre-seed or seed funding is done, is the founder really open towards getting a CTO or getting a co-founder who has that kind of a technical capability, who can actually understand on ground how the technology needs to be built when it's going to scale, right? So those are the traits which again no, we need to be ready as founders when we are pitching or we are creating a great team. Motivation and passion, no doubt about it. When you are a founder, you are no solving for something, somewhere down the line you have chosen to solve something through which you have already gone by, or it is having some emotional attachment with you, where you would have seen something in your life for which you are trying to build an empire now. And that passion which you show, why you want to drive that change and why you want to disrupt the current space is very, very critical. So you need to display that in your behavior, in your no pitch, not only in terms of writing, in terms of your communication when you are interacting with the investors. In terms of the experimental mindset, right? No, how quickly you are able to challenge your strategy, or some decisions which are not working, right? Because see, in a startup world, in fact, as investors also would understand that the founder needs to take actions or pivot businesses very, very quickly if something is not working, right? And it's bound to happen because when you're growing a business, right, the the things will come to your platform, your table, where it needs to be pivoted, right? Something's not working, you need to be experimental, you need to have a quick decision making with a validation with your mentors, whether you want to go ahead and do something else. Again, let's say take an example of a healthcare sector maybe, and one of the startup would want to have an HMS system developed. Now, HMS system, which is hospital management system, which is getting developed, would have an access to on a few hospitals, which are getting built. But what if tomorrow that scalability comes into question, and you are being questioned in terms of the growth of the startup itself? Are you as a founder open enough to go beyond the hospital management system and try some new technology which can associate or which can be attached to a critical illness segment? Through technology it can be solved for, right, by connecting to some expert, some surgeon sitting outside India in different geographies, right? Those are the kind of pivoting is very, very critical as a founder when you're running a startup, right? And those are the mindsets no, which again you need to display through your behavior, through maybe if you might be a second generation founder, right? Your previous business would have got no scale, you would have sold it to somewhere, and again you have started new ventures. Few of those would have failed, right? But yeah, these are the things which tells a investor, right, that you have an experimental mindset, which is very, very important. Again, at large, the scalability, when we see, right, the execution capability also gets assessed, right? So you need to have that ability to display. You need to have that capability where you are able to execute things right from the scratch to a stage where it's getting scaled, right? So initially we know that as a founder, no, you are a sweeper, you are a CEO, right, of the organization, right? So you need to be ready to execute each and every task no on your own, and then and as and when you scale up, you need to execute the strategies well. You need to execute the actions well for you to scale up, right? So again, this is one of the traits aspect which we need to cover. We need to have it covered as a part of our readiness for funding. And last but not the least, ability to network, right? Ability to network, as I mentioned earlier, is not only with respect to your founders fraternity. It is to do with networking of the mentors, networking with those advisors who will constantly be guiding you, networking with the VC firms or angel firms very early in your stage, right? For you to keep on constantly getting feedback how you need to further improvise and develop when you're getting ready for a seed funding, right? And that's where many a times the roles of the incubation centers and accelerators comes into picture, where they actually give you the kind of sessions, right, the way we are having one right now, for you to kind of understand the importance of scaling the startup, making the ready startup ready for the next level of innings, right? And that's where the entire networking ability of a founder gets assessed. As simple as getting a very super rich angel on getting them on your platform, right? If you have an ability to get such people on board, it will give you an immense edge, immense input as startup to scale at a very very fast pace. uh, Last but not the least would be the art of the valuation itself. When I say art of the valuation, right, it's important to associate it with these three factors, right? Where you need to understand that what's the stage of the funding with which you are going in the market, right? And as we know that right from the concept stage to what do you say, stabilization stage to a growth stage, the respective uh, pillars of the pre-seed to a seed to pre-series A and series B kind of fundings are associated, right? So at each and every stage, when you are going in the market, you need to have right mindset, right assessment of the valuation you would be getting, right? Because initially when you are at the concept stage, you are showing good traits in the first two aspect which I spoke about, that yes, you have a great business, you have demonstrated you are having a great team, you would get no initial good valuation, no, which can be no depending on the sector, no 8x, 10x, 15x, whatever is the case may be, right? And obviously it depends on the stage, but as and when you are scaling, you are growing, right? And you are going towards a higher series of funding, no, your business scalability, your business profitability, your say-do ratios are getting monitored for you to get that kind of evaluation, right? So staging of the funding also becomes that much important. The other important aspect is that when you are getting ready for the investment, right? Many a times we have seen founder coming back to us and asking that, no, what should be your ideal dilution which we should be doing when we are going for a pre-seed or a seed level of funding, right? Now there is a range here. I mean, there is not a written rule here, but ideally when you are going for a seed level funding, no, as a founder you would want to no dilute anywhere between like 10% to 20-30%, not beyond that. Reason being, you need to also keep no some portion of your share or cap table for the ESOPs which you need to kind of issue to the employees who are very hardworking, who are very much there from the day one you started building your empire, right? And you need to kind of retain them, you need to kind of reward them with those ESOPs, right? So few percentage goes there. Apart from that, no, maybe let's say 20, 30, 40% is what you have diluted. And by the time you reach Series A, generally if you have the shareholding in your startup which is more than 50%, right? That's where you have a good chance of getting a good valuation, with the fact that the first two aspects are being covered, and you have already been able to demonstrate through your actions that yes, you have grown your startup, your company to a level where it's now ready for a further big round of funding, right? And third thing, again, no, while everything said and done, no, as a passionate founder, you might want to value your startup at an X times, right? VCs do not work like that. They rely on data over desire, and they would always constantly go back to the sectors no within which they are looking at a particular startup. They will look at the business, they will look at the team, and basis the data which is on table, they would want to negotiate the valuation, right? So you, as and when you are also going in the market, needs to understand that the kind of financial projection which you have make, the kind of business roadmap or a technology roadmap which you have built, what is the right level of valuation that you should be getting at a different stage of your startup, right? So that's again a very, very critical aspect when you are negotiating a valuation with the startup, with the VCs, right? So I think, yeah, these are the broad few points which I thought I'll kind of cover as a part of this session, and would now want to take up question answer and make it more interactive for the larger benefit. Amartya, you want to go ahead and moderate the questions?
Mr. Umar, maybe you can go first.
Yeah. So my question was, we are a company. Now we have an idea which is under a separate logo, as in which is under a separate name. So if we're looking for, let's say, a funding, how would that work out? Because see, it's part of a bigger company. For example, we're into services. Now there are two verticals. One, we're so focused on social. Second is a commercial, which is recruitment, right? Now we are looking at a space where we're providing connectivity in telecom dark spaces. So under the thing of CR Bolo. So CR Bolo is a part of Jadeite Solutions. Jadeite Solutions is a wider umbrella, and that is a private limited company. So if we were to look at the valuation of CR Bolo or something like that, how does that work out? That was my broader question. Just a sense of things. How would you advise?
Okay, so the point is that this particular vertical, in a way, and we'll have to obviously get into the details of that. But if this particular vertical is something which is very, very different from what you are running as a part of your existing company, and the entire technology or the entire manpower which you are assigning towards that, if you think that has to be not separately valued, right? And you want a separate valuation for that itself, I would suggest to look an option where you have a separate entity itself. Because the moment you will put it under a current umbrella, right, it will be seen as a pivoting on the business, right? And when you do a pivoting of the business, which is absolutely fine, no doubt about it, you will have to again go back to the basics, understand that why that pivoting was required, right? And when you are doing this pivoting with a fresh set of eyes, your valuation will be determined, where your previous valuation will always be discussed with respect to what you had committed, and what you said versus what you did, right? And that's how the entire valuation will be discussed, basis what performance you have done basis the previous round. So if that's the way it needs to go about, I would then recommend you to go for a separate valuation itself. Yeah.
Thank you. Thank you. Like to go next.
Yeah, I have a question, sir. This is Sharat.
Yeah, tell me.
Yeah, we have started a company initially in a partnership firm. Okay, due to the compliances, after that we have shifted it to the private limited company. Okay, but we have generated substantial number of revenue in our partnership firm. Okay, but you know, in India, the transition of company from partners to the private limited is little bit difficult. Okay, so we have completely changed the entity and we have just used that name. Okay, in private limited company. So if we have to go through the due diligence or valuation, will it be counted in our valuation?
See, so no, if I remember, if I understand the question correctly, you are saying that no, the legal form of the services which you are providing earlier was a firm, whereas the same services have now been provided, but in a different legal form, which is a private limited company, right? And but the
Yeah.
people who are running the same service set of services are same, right? I mean,
Yeah.
that's the
Right.
point, right? So
Exactly.
see, yeah, so then the point is that when you are going ahead and getting the seed funding of such kind of a company, right? Again, as a investor, I would see know how profitable venture was it which you were running earlier, right? So the same set of partnership from which you were learning earlier, no, how was that doing? No, what were the clientele base, how much business you were doing there, right? And why and on what basis you are now pivoting, right? Pivoting that, right? So you said, okay, because we don't want to run anywhere under partnership, and the no private entity structure is more suitable as to us for us to go bigger and scale better, right? We are changing for it, then the due credit will be given to you for the business which you run successfully previously, and the entire clientele base will be shifted here in the new private limited companies, what I assume, and basis that your business no will be evaluated, right? So that's the again a connecting business dot which will come into picture, and accordingly the valuation will be done.
All right. Thank you so much.
Yeah.
Vikram, maybe you can go next.
Thanks, Amartya. Thank you, Chintan, sir. I had a question, sir. Since we are, I would like to have your advice for us as a startup who is not a legacy pharma company, but we are into drug development and drug discovery. And currently, our drugs, like we are into that clinical stage validation. We are just approaching animal model studies. So in such cases, if we are trying to raise capital, what would your advice be on how to evaluate ourselves? Is it like by having more IPs in hand, or what would the investor see that I can actually say that, what I can actually show to substantiate my claim that what I am asking for is very much valid? So, for example, since we are working with cannabis-based drug development, the biggest source of problem is having a license to grow it and then to run clinical trials from it. And we are the only ones who have got the license to grow it and extract all of that and run clinical trials, but not on commercial purpose, only for scientific purposes. And at the same time, we are incubated at very premier institutions like IIT Roorkee and also at National Institute of Pharmaceutical Education and Research. Seeing that what we have developed so far till now, what would your advice be for us to go ahead and evaluate ourselves in such a way that investors and respected investors like yourself or VC firms would be willing to invest in our firms? Thank you.
Sure. Yeah. So that's a very interesting and a good question, right? That how do you approach this kind of a company who is actually at a pre-product stage in that sense, right? Because you're in a process of developing your product. Now, frankly, as an investor, when I look at such pre-product companies, right? For me, the source of truth becomes the proof of concepts, right? Those proof of concepts will be driven with the fact that how many such trials you have done, or how many have you done any survey regarding the product which you are trying to develop, right? Tomorrow, who is going to be your customer? Let's say even if it needs to get used in those scientific labs, right? Will any pharma company would want to use that as a part of their R&D process, right? With respect to your product, or the formula which you are developing, right? What kind of IP requirements are there, and have you complied those which are meeting not only the Indian standard as well as the Indian international standards, which are critical for you to be there in the market, right? So those are some of those initial thoughts or initial tick marks which I would want to do as an investor before we kind of even discuss anything on the valuation. And when we talk about a valuation on taking such early bets, right? The other thing which I would want to understand then is what you mentioned, right? That the communities like IIT Roorkee, from where you did this incubation, right? How that process has been. Have you been given any grant by the government or health ministry who runs such kind of a state level or an national level startup programs, for me to get that confidence as an investor that yes, you are on a right track. There is a visibility with respect to the value proposition which you are trying to develop, and on top of that, who are those set of advisors or mentors, right, who are working with you on your product, which gives me a confidence that yes, Vikram is actually working on a product which is going to disrupt the market tomorrow, right? So it's not a single answer. These are the kind of combination of the traits or aspects which gives me a confidence as an investor that if I take an early bet on Vikram, and if it goes well, it's going to give me a great disruption in the market which he's targeting, right? And it's eventually get converted into numbers, right? And that's how I would see it as an investor, because see, startup is all about taking risks, right? That's the bottom line. So if I were to take risk, the risk will be taken based on these factors.
Thank you so much, Chintan sir. I would like to definitely not to just pitch, but just to send my pitch deck to you so that I can get your insights, because these are very, very helpful. And you can tell me, because if your eyes match it, that I know, because it comes with the experience, that I would be able to speak with, investors like yourself in a more rational and more logical way. So thank you, sir. I would be looking forward to that help from you. Thank you.
Absolutely, Vikram. Yeah.
Mr. Chandra, maybe you can go next.
Good evening, Mr. Vyas.
Good evening, sir.
I have a different kind of problem and different kind of set of questions. We are working with the beggars, and people think that beggars means it is all about donations. But this is for the first time we have formed a for-profit company. Number one. Number two, what we visualize or what we have already worked out. The market size is 23,000 crore. Number two, we are targeting 1% of it in 3 years. Number three, we are targeting 0.1% in the first year. And we have already tested our one product and two services through which we want to raise this fund. We have already tested it successfully. So it was registered on 12th of August. Before that, we were probably 6 to 7 months before that, we already tested all these things before registering the company. So this is the system. So what should be our ask? Now, we have not taken money from anybody, and we are not at loss. We are already engaging the beggars. We are already we are already managing our finances. We are not even bootstrapped. It is completely market driven. So in this at this point, what should be the ask?
Okay. So see, when you are asking money, right, and the model which you explained, right, for me, no, it is also important to understand that the money which you are asking, right, it's going to be spent where, and ultimately, what is that larger picture or the problem statement which you are trying to solve for, right? That's where the first question would be, because for me, as an investor, right, and for you as a startup, it is very, very important to understand the value chain in which you are there trying to create a value, right? So that is something which maybe at this point of time when we are talking, I'm not clear that where you exactly fit in that, and what you're solving for me to even think of no giving any money or cutting a check, right? And that's where it lies right now, maybe. So maybe if that is the case and you want to kind of dig deeper, Amartya can kind of connect us, and we can connect offline and understand it better for me to give you the detailed answer on that.
Yeah, but plainly speaking, I am telling the two aspects for which we are asking money. One is tech, another is customer acquisition. That is what. These are the two things for which we are asking money. We are not asking money for any infrastructure or any assets. So these are the two aspects. One is we will be developing one app and the technology part. And number two is that customer acquisition. We have set a target that 2 lakh customers, 2 lakh repeat customers, or we say members, will go for 1 crore visitors come to Varanasi city where we are working. So 1% of that we are targeting. And number two, 88 lakh, the outside means Varanasi, the overall the customer base. So out of that also we are targeting 1 lakh. So this is plainly to see. The rest I would like to request Amartya ji to connect us.
Definitely,
we can-
Correct.
I'm saying Amartya, we can connect separately, because this is something where the entire value chain and then how they are fitting is something which we need to understand better.
Right. So just to understand more about your business, like Chintan also and other team members, they have to be like getting to another call, a separate call, right? That will be much better. I would jump to last two queries and then maybe we will wrap this up. Synthetic gas, Mr. Uday, I guess.
Good evening. Sir, we are still in prototype testing. We have collaborated with Anna University to test our prototype, and shortly we will take a POC and hopefully a patent also. Now, I am always questioned for valuation. So, how do you suggest?
Right. So, as I mentioned earlier, right, the business, the team, and then the art comes, right? So for you to get an answer on the valuation, right, what we need to understand first is that what's the business you're developing, what's the value proposition, what is it going to disrupt tomorrow, right? How you're making somebody's life easy by solving that problem, right? And with the right set of team and with the overall business model and the financial plan which you have in place, right? And once you are able to demonstrate the proof of concept, right? All these things may take initial 2-3 rounds, and then maybe in the fourth round the valuation discussion comes into picture, frankly, right? Having said that, there is no straightforward answer on that valuation piece. How do you derive it? Generally, you need to understand that within the sector where you are trying to solve this problem, right, how critical it is, and what is the related competitive landscape which is available, right? That will in a way give you an idea that your technology is going to change the world, change the behavior of the customer for that matter in next 2 years, which can be very, very disruptive, right? Versus something where there are already enough and more player in the market, and the market is so large enough to accommodate you also as a third player, will have a different aspect, or will have a little bit of bearing on how do we discuss valuation as well, right? So there are different parameters basis which valuations can be valuation discussions can be anchored, and then the art of valuation can be derived, right? So that's how it should be. But yes, these are the fundamental things which I discussed earlier, which you should be keeping in mind before even you kind of reach to a stage where the valuation will be determined. But generally, as we speak, generally at the seed level, pre-seed level, if the product is good, we understand that yes, you have a customer, you have a proper value chain defined, with a good mindset to be in the game for a longer term, and you will be able to scale the business in coming 2-3 years. No, you can go ahead and have a discussion where if and when you start generating revenue, you can get valuation anywhere between 5x to 20x, depending on the sector and the disruption you are creating in the market.
Thank you.
Yeah.
Right. So the last question for the day, for this session, Mr. Umar Parvez.
Yeah. I just wanted to take a minute of your time. In the sense, we would want our idea to be validated by you, if possible, at a later stage. Just to give you an idea, we're addressing the telecom dark spaces, which is kind of providing connectivity in the unconnected areas, specifically in the rural areas, right? And we've actually been recognized, as in we were given the first prize for innovation by IEEE. So we got the global award. So and we've demonstrated the proof of concept in Orissa. So we've actually got the community together in terms of data sharing. So we connected a radio station, 3 self-help groups, 2 schools. So that was how we kind of demonstrated the concept. Now, the potentials are huge. We're doing a cost-benefit analysis. And we have 4 verticals that we want to leverage. One is like digital banking. One is like emergency services. Third could be disaster management. And the fourth could be the entrepreneurship and innovation, which can prosper once you have that connectivity in place. So we are addressing digital exclusiveness, there's digital inclusion and there's digital exclusion by default, right? So the more digitally advanced we become, the more excluded a certain set of people become, because they don't have the required connectivity. And we're trying to kind of connect those so that we get the same opportunities in different areas where currently things are lacking from the infrastructure perspective. So a lot of things can happen. So we would want to kind of discuss the idea further wherever possible. And I would request Amritya to kind of share your details if you allow. Then we can kind of take the discussion forward.
Absolutely. I mean, Amartya, I can go ahead and share my email IDs with all of you, and we can definitely connect on any of such inputs which you need. Obviously, because as I mentioned earlier, what we need to understand always is that where you are getting placed in the value chain, right? That will give us a better idea with respect to the the problem statement which you are solving with the value proposition which you are bringing on board, and that will help us understand then the entire competitive landscape with an overall picture of how the market sizing is, what's the total addressable market, serviceable market, all that things when we put together on a piece of paper, right? That eventually will give us an idea that what you are trying to create as a solution is actually making sense, or it's a solution which is actually looking for a problem, for the lack of the words. That's the way we kind of understand it on an overall basis, right? So that's important.
Yeah, we wanted to do a sense check, and typically probably if we're coming out in the right way in terms of we have a lot of ideas, but is it coming across in our conversation? That's something that we want to validate with you.
Sure. Yeah, we can have a detailed discussion offline on that. Yeah.
Thank you.
Sure, definitely. We would be also love to connect you with some of the startups and right. So a wonderful session comes to an end, and also a wonderful day for a long day, I would say, for these startups as well as for me. Thanks, Chintan. Thanks for joining and taking this session and answering so much queries to these startups. Hope they have the idea about the ask money, about what exactly the perspective of investors, which might be useful for them in their next investment talks. So thank you. Thanks for this session, and definitely I would connect you with few of these startups in future. Thanks a lot.
Absolutely, Amartya. Really happy to have this attend this session, and thank you so much to you and entire Lemon Idea team for having me here and giving me this chance to interactive with so many people brainstorming and discussing such important questions, and really looking forward to speak to these guys again and try and contribute to the overall ecosystem. Yeah.
Thank you. Thanks a lot.